Good morning, ladies and gentlemen, Clueless 8 members and free trial subscribers, Clueless 8 trading members and free trial subscribers. This is Frank on a beautiful sunny Wednesday morning. Fed day, Fed meeting at 2 p.m. It's July 27th, 2016. Here's a brief but important pre-market AM report. So let's get into it. First, a couple of quick observations. As you've clearly seen from my hard work and diligence and continuous updates on the market on a very precision basis, my forecasts have been overall very accurate, precise, and individual chart patterns have come to fruition despite heavy turbulence and volatility on markets that we incur on a weekly and daily basis. For newer members and free trial subscribers who are listening to this particular pre-market AM report, keep in mind that my service is a bit of a learning curve. Many who have been with us for months, if not years, since we started this service, Clueless 8 Trading, back on April 15th, 2014, will have learned only one thing: that in order to succeed and succeed consistently, in between losses, of course, that's part of trading, that's part of life, you have to have focus, discipline, and diligence, and persistence in between all the wisdom and the knowledge and learning that goes with it. So in order to do that, it is extremely critical that you review, even if quickly, people have day jobs, okay? Review my charts, my comments, my brief news analysis, my Periscope broadcasts, and of course these videocasts, which are also posted on the Clueless 8 Trading YouTube channel for public consumption, the ones which are put out there for free. That you need to basically go through these series of things in order to understand and maximize the power of my work. I am no genius. I am just a very smart and passionate student of the financial markets, because I believe that financial markets, just like life, are nothing but a manifestation of human behavior, what we call behavioral game theory. In between, there are technicals and numbers and fundamental analysis and macroeconomic global analysis, blah, 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 blah. But the reality is, it's a question of human actions, whether they're buying or selling, which are, in many cases now, as you all know, pushed and propagated by high-frequency trading black boxes, aka algo HFT programs, which dominate about 70 to 80% of the trading in the markets on a daily basis. Hedge funds are day trading against you. Mutual funds are buying or selling stock in blocks. And in between all that, Clueless 8 Trading has a phenomenal track record overall. Not to say we don't get our losses, but the losses are minimal and the winnings and the winners are large. Saying all that, I wish you all well. Many of you have signed up for the advanced coaching session, which I diligently do on the weekends. I also can do them on the weekdays after market. Sometimes gets a little tiring. After all, I need some downtime too. I want all of you to go out there and provide referrals, which many of you have, because we believe in organic marketing, word to mouth. Saying all that, let's take a look at what's going on. Today is Fed day. As you see the chart of the S&P 500, this is a daily chart. This is obviously a long-term view. What we're seeing here, and let me get my drawing tools. What we're seeing here is a bull flag for consolidation formation, which I've showed on my charts right there. You can see how narrow this band is. And if this is a bull consolidation channel, bullish consolidation channel, then we're going to hit this move here at some point in the near future. It could be the end of July. It could be the beginning of August. I don't know. Now, this turns into a negative formation if we break hard and fall below very important key number, which was the previous highs on the market from last May, which were around 2134 to 2135. It seems like distant memory, but that's where we were. And they said we couldn't go higher, right? This was your good old lovely Brexit, which gave the opportunity for the big short, as I like to call it, to cover their substantial. There have been news out there that probably $9 trillion worth of notional shorts. That means that's how much of the overall short value that they were short overall on the market. That means they were leveraged to the hill. Whether it be Druckenmiller, whether it be Bill Gross, whether it be Jeff Gundlach, whether it be Soros, these guys covered here. Look how precise these channels are. Remember, a chart itself doesn't tell you much. It's what you transpose on it what matters. That's what I do best. And it took me a bunch of years to really, there's no perfection. I'm still evolving. And I don't believe in perfection because once you're perfect, you're finished. But my charts are, like I said, I draw them in a different way. All of you can take advantage of it, as you can consistently see. Bottom line is, this was the good old Brexit short. I'm going to call it BRX. Okay, not a stock symbol. Brexit. This is it, and this is the big unwind of that short that we are seeing right now. Now, at this point, we are, and I'm going to show you the slight negative divergence, and I've showed this repeatedly, that is taking place. We are very overbought here, and it's starting to curl down. Remember, divergences can take days and sometimes weeks to develop. So, are we going to reset at one point down here? Well, let me finish this first. So here's the channel. It could be a quick burst up, and if we hit the 2200 plus level, which is only 180 Dow points from here, to be honest with you, I wouldn't be looking at a gift horse in the mouth, okay? So this is my line in the sand around that 2200 level, round figures where I think we can develop a sizable short position. Very difficult to short the markets right now. You know that, other than intraday shorts. If we break down below the previous highs, which is this lower end of this lower Bollinger, 2134, or even a retest of the 2101 around this level, things start to get hairy. If we test the lower end of the channel, we're going to come down to 2039. Those are 500, 600, 700 point drops in the market, where the good old Amazons of the world and the Pricelines and the Netflixes and even the Apples will give back $5, $10 in a matter of hours, if not a matter of minutes. I don't know which way it's going to go right away. In fact, it'll go both ways. In other words, it's going to go probably shoot up higher on the Japanese stimulus, on the Fed statement and all that stuff, probably close the month on a very strong note, because fund managers, don't forget, we're in the middle of window dressing right now. For many of you don't know what the heck I'm talking about, that's when fund managers, pension fund managers, specifically mutual fund managers, put a lot of the quote-unquote high momentum hot stocks with high beta, to create alpha in their portfolio. What does that mean? Alpha means that excess returns in their portfolio. Because after all, hedge funds, believe it or not, and many mutual funds are still suffering because they are underinvested. Believe it or not, that is the case. Saying all that, this is a very critical juncture. It is a severe bottleneck. I repeat, okay, you can see that. And looking back since the lows of 1800s, not the Brexit lows, okay, but the lows of 1800, I don't recall at any time, maybe you guys can help me find it, that we have such a pinched Bollinger, pinched Darvas, whatever you call it. In other words, this market is at an inflection point. Now, that's not the end of the world. I don't believe in Armageddon scenarios. If you're waking up this morning and listening to this video cast, you're alive, right? So life is okay. Because God has given us eyes, ears, hands to work, to take responsibility, to make money. For our families, for ourselves, for people we'd like to help, whatever the case may be. So be grateful and stop painting this Armageddon scenario all over the place. Corrective pullbacks? Absolutely. So bottom line is, The standard deviation, very important, from the moving averages. These are the moving averages I track very closely, the 34 and the 50. Right now is quite excessive. I would say they're a +3. I put a fantastic technical analysis article out there, which this gentleman, who's probably a lot smarter than me, you know, on technical analysis, is basically said the same thing, which I've said before. We're about 3 standard deviations away from here. When we fell down here, we were probably 3 standard deviations below the moving average. So what does that mean? There should be a corrective pullback, which on the bullish case scenario should touch slightly around that 2130 level, which would be the lower Bollinger, if not test the 34 50 and the 34. Now, these drops are not going to feel good if you're stupidly long. Believe me when I tell you. All right. So it's going to be the same old story, like I say. Don't short when things are really hot. And I'm not saying short right now. I'm just saying we are developing that process. A bull scenario would be a pullback and then a springboard effect all the way up here, crossing over 2200. And at that point, I believe we can short the market hard. At some point or another, this channel on the high end, close to about 2270, somewhere around there, in my opinion, could be reached by 2016. In the meantime, there is a strong possibility, and these happen over weeks, if not months. August and September, I've said this before, and part of October, okay, is going to be a very rough month. Doesn't mean it's going to be a straight line down, but you gotta watch your pants, all right? You don't want to be held with your pants down in these type of scenarios. I'm always there to obviously point out those inflection points. So this, I think, will get tested, the 2050 level, and this would be the high end, this would be the low end. And as you can clearly see here, it is nothing but channels. All right, now that's your S&P 500. Now, the Fed. Let's look at this for a minute here. Let me get out this thing. So looking at the short-term picture, let's take a look at the 1 hour. This is where we are. You can see the formation of that bottleneck right here. So what happens with the Fed? I have no clue. I know that the Fed's probably going to raise their growth forecast because Brexit didn't kill us. So why shouldn't they? If they still tell us, I'll tell you honestly, if the Fed goes out there today, if the Fed goes out there today and tells us that things are really not looking good and they want to keep rates low for another forever or whatever the case may be, the markets are not going to like it. The markets like the fact, this is what the markets want. They're like spoiled kids. They want the Fed to say things are getting good, but we're not going to raise rates, which they have been saying. But overall, there were global risks in the market that I believe the central bankers around the world, not just our Fed, needed to take into account. Now, saying all that, I'm not going to get into central bank policy discussions because I'm not a central banker. And many of you have real dogmatic views about the Federal Reserve and central banks, which is all fine and good. Our brain is there to have views and opinions. But keep in mind, that doesn't make you any real money. All right? That's just the way I look at it. So, saying all that, this is the tight range before the Fed. All right? Around 2177, 2160, the 70-point range. If we break, there's a gap here. That gap obviously is not what I expect, but you never know. There's a gap here. That gap is around 2120, 2118. That's a big drop. 2170 to 2120 is 50 points. So you're looking at roughly about 350-point drop in the Dow. It's happened before. So I'm warning people. 350 point in the Dow real fast, real quick if the currency markets go berserk. It's a low probability, but it's there. In the meantime, the upper end, probably another 100 points or so, it's possible. Now, not a straight line. The Fed is a three-wave move, as we know very well. Generally, Fed day. Explain this clearly because these are all important to whatever trades you're doing today. So is a three-wave move. Sorry, three-wave. Okay. So generally speaking, the first wave equals the third. That's a general, rule of the thumb. Is the third. All right. So bottom line is, if we shoot up, then we're going to obviously give back 50% of that fast. These are going to happen very fast, within 15 minutes, sometimes shorter than that, within half an hour. So, so this is wave one, wave two. if this happens. And then wave 3 will be like that. After wave 3, you want to take your profits nicely because come Thursday, there's going to be profit taking again. And I think they will end the market on a strong note going Friday. Okay, so this will be the Friday move. But tomorrow, if we land up higher today, they will sell the market tomorrow in the first part of the day. I'm telling you that right now. Now, individual selections, individual winners that we get on ER and stuff on earnings report, that's a different story. But be careful. Now, if we fall hard on wave 1, then we're going to bounce, because shorts are going to cover here. And then we're going to bounce, and then we're going to try to, who knows, maybe we'll hit that the V-shaped type of thing. Everyone thinks, oh, it's really good, but then they're going to sell it hard because this will be wave 1, this will be wave 3. I've generally seen this happen. I've played this very successfully with small amounts of S&P calls and puts. I do not recommend to other people if they're not fast active traders, because I'm not going to be walking you through that type of volatility mess on Fed Day, just so you know that. I'll put out posts out there, but I cannot give you timely alerts because things are moving way too fast. So just remember, 3 waves, okay, 3 waves after Fed. And that wave 1 could be, after post-Fed. Before that, the market generally, what they do is they run up, then comes 2 p.m., all right? Then they do that wave stuff, and everyone just, goes nuts, but it's going to be real important today. So keep your positions light and do what you need to do. I'm taking some nice profits off the bat. You got EW up $10. You got Apple up 8. It's going to be up $8. I said 105. Look at my chart. It's going to be 105. And just to show you, so here's your Apple chart. Look at that. 105. Test of this beautiful downtrend line. I delivered it to you guys. All right. So that minor few puts are going to go 0, and the calls, forget about it. Congratulations to the one who participated. Good for you guys. Remember, if you do not play earnings, I'm not pushing anyone to do anything. It's your decision. But if you don't play earnings, you don't know what the behavioral characteristics or of that stock is. Now, when I kid around and say buy 1 share, I mean it. Buy 1 share. Because this way you are engaged. Engagement is experience. Engagement is learning. Paper trading and looking, SOA sitting on, what, it's not doing anything for you guys. Your emotions and money have to be involved. 1 share. So you say, oh yeah, I made $10 and I paid commissions of 5. You know how much you learn? How much it's going to multiplier effect of how much it's going to give back to you when you trade that stock again? There are so many stocks I've discovered by doing earnings reports because then I start to track them, and then they become one of my, top 20 trading stocks. So please, there's a lot to learn. So this is the channel. It follows. I showed that. We're going to engage here, possibly run up to 107.5 by Friday. There's a gap here. I've shown this before. People believe it can go there. Yeah, it can go there. 110, it's right around the corner. People think, oh, another $6 from here. It can happen. It completes the pattern. It's all about pattern symmetry. In between, lots of noise. Chop, chop, chop. This is what I was looking at. You're looking at a nice oversold condition on the daily, mind you. That's nice. Oversold conditions going into earnings, nice little pullback, creating a consolidation channel, and now up here. It's the way it goes. Does it always work this perfectly? No. But hey, it's a game of probabilities, not a game of certainties. On that note, ladies and gentlemen, I will sign off. Thank you to all the new members who are coming in. You're seeing what we do here. There are massive profits being made. I'm not going to sit here and beat my chest and say, okay, I did this, I did that. But you know something? God bless the USA. You live in a nation which allows you to do this type of career, this type of living, and it's money out of thin air. So for God's sakes, appreciate it. Give a lot back to your favorite charities. My one is the Wounded Warriors Project and many others. I support the armed forces. I believe in what they do. And you know something? Stay focused. Stop complaining. Make money. Thank you for listening.